Hey guys, what's up? Welcome to a new video. Right, so in today's video, we're going to take a break from the predict outcomes. And we're going to talk about understanding liquidity conditions, right? So we've been talking about the bias predictor all this time, right? Which predicts the AM session, and if we have red news events, it predicts the entire trading session as a whole for the New York session, right? So now we're also going to talk about the price action predictor, okay? And for the users that are using the predictors, you all know that we have both a high resistance liquidity run day and a low resistance liquidity run day. So in this video, we're going to be talking about high resistance liquidity runs, okay, and how you can anticipate them and how you can trade these conditions if and when the predictor predicts it. Okay. What is a high resistance liquidity run condition? Now, as per the way I define it, right, it is not a liquidity pool. It is a price action condition. It's a state of delivery. Okay. So this is when price is seen to be trapped within liquidity pools that are important by nature. Now, important liquidity pools are the highs and lows defined by time. So such as previous day high, previous day low, Asian high, Asian low, etc. So the main characteristic behind a high resistance liquidity run day, as predicted by the Trading Academy price action predictor, is that price will tend to run back and forth between these liquidity pools. Okay, price will tend to run back and forth between these liquidity pools, sell, buy, and so on. All right. The algorithm, as majority of you call it, or you refer to it by that, seeks to liquidate existing profitable positions in the market. Okay, profitable positions in the marketplace. Example, so all the horizontal lines over here, it indicates important liquidity pools. Okay, so what I'll ask you to do is I'll ask you to note the back and forth price action, right? That is a high resistance liquidity run condition. Finding it hard to move in one direction, so it seeks liquidity to make its move, right? So here, there's an important low. Take it out. London goes up. News event, I think, takes the high out, sells off. London low, takes the low, goes up. So that is to say that inside of high resistance liquidity run conditions, if there is enough of a range, it's completely safe for you to ping pong the market, but of course with reduced risk. Okay, with reduced risk. When do high resistance liquidity runs, or when do high resistance liquidity run conditions exhibit low resistance liquidity run characteristics? So there are going to be days in which a high resistance day looks to be a low resistance day. Okay, so this is when the New York session has one or multiple high impact news drivers, right? So the compression or the anticipation of volatility causes price to exhibit low resistance liquidity runs. Okay, within a high resistance framework. So meaning to say, let's say the prediction is high resistance. Okay, so prediction is high resistance. This is your entire framework. So high resistance framework. Okay, but inside the day, when price takes a high out, it's going to exhibit low resistance moves down. Takes a low out, it'll exhibit high resistance move up. News release, it'll exhibit massive move down, so on and so forth. Okay, so that's your logic. It's obvious. Okay, objective and obvious. Now, when an important liquidity pool sits far away from current price, right? This will create large expansions whose main intention is to liquidate, not liquidity, stupid me, is to liquidate that existing position and reverse back into the range or into an opposing important liquidity pool. So meaning that if you are here now, let's say this is previous day low, previous day highs all the way there, and you are trading somewhere here. And the next liquidity pool is here. The price will seek that and then exhibit the high resistance move back up, down, so on and so forth. Okay. High resistance liquidity pools or high resistance liquidity runs conditions, it's like a godsend for ping pong traders, for 1 minute traders. Okay. Right. Let's look at some examples and we'll be done for the day, for the session, for the video. All right. So I'm assuming you guys can see this. Let me make sure. Yeah, you should be. All right. So let's go to the 15-minute chart. Okay. And let's just go back a bit to, let's just zoom out and go back. Let's say here, for example, replay mode. Yeah. All right. So look at the top right corner. Okay. Top right corner. It says high resistance liquidity run conditions. So mark out the important liquidity pools. So here, here, there, here, and I think, yeah, here also. Yep, right. So look. Okay, so important liquid pool gone. They're expecting downside movement. Okay. There you go. Important liquidity pool gone. We have this high here. We're expecting upside movement. Okay. There you go. And that's the end of day buy. Low of the day formed, right? Okay. Let's see. Next one. We have the high still. We have this over here as a previous day high. We have this right here. And we have this also. Also, before I forget, we also have this. There. And we have this right here. Okay. Look at the top right corner. Okay, high resistance liquidity run conditions. Asian high, Asian low. And your job is to use the predictor and go when you're backtesting, just go and check Forex Factory and check if there are news events as well. So if there are news events on your backtested day, then you will see how price behaves. Okay. Now see, it takes out the high, there, shifts, goes down here, here. Still important liquidity pools, takes it out in one fell swoop, goes back up for the one it did not tap, and there's your ping pong. Sell, buy, sell. Okay. What's remaining? So take them out, take them out. What's remaining for any possible for any other possible opportunities? High was taken out, low was taken out, right? Here and there for now. There you go. Go on. I can expect longs, right? Let's put this also. Here. And here. Expecting longs. PM trend longs. Let's see. There we go. Okay, heading into Asian session as well. That was it. All right. So we have another low there. Then we have previous day high. Then we have what else do we have? That's pretty much it. So we have the Asian high right there, gets taken out. Asian low right here. Let's see. That's a nice reaction there. Price goes up. Okay, continuation. All right. Then we have liquidity. Liquidity. Asian high gone. Sell off. Okay. High over here. Liquidity taken. Look at this 12:30 lunch hour. We have New York high right there. Okay, New York high right there. Doesn't change the fact that we took our liquidity, right? So now over here, at this point, if you're going lower, we are going lower here, here, and also here. Wherever we get the reaction from, we're taking the reaction and going up or taking the reaction and going down. Okay. There we go. Here, leading to a buy. Okay, buy. Overall bias is to the downside. How do I know that? Look. Go here. Put your bias predictor. What the bias predictor say? Bearish. Uh-oh. Now we're going down. There we go. Okay. We ended up taking out this, I think. Yeah. Okay. All right. Okay. Example of high resistance conditions. I think this was FOMC. So you can see how having a high impact news driver can exhibit low resistance characteristics. So low resistance there, low resistance there. And now we should be able to see low resistance up also later. Okay. Right. Delete. Okay. Now let's have a look again. Okay, now look, low resistance liquidity run condition. I'm not going to show it to you. Okay, but I'll play it and you will see how absolutely magnificent this is. It's telling you that, okay, today, at this particular day, you're gonna observe a freaking amplified run on liquidity, meaning everything that wasn't taken. So this, and this, they're gonna go. Well, of course, a low must go first, right? So let's see. So we have London low for now. When London low goes, okay, good. We want to see an amplified run up. Let's see. Low resistance conditions. Okay, so let's see. Oh, wow. How about that? High gone. Is it gone though? Yeah, it's gone. There we go. Okay. And that's the deal, guys. That's the deal. On this day, high resistance liquidity run. Okay. What's that? Let's see. We still have that previous day high. So it's still going to remain there. We got Asian high. It consolidated going up. Here. What's this? London high. London high gone. Sell off. Pull. Up until where? London low. And Asian low. So you see London low gone. Ping pong. Ping pong. This doesn't count because that's not a session-based low. Where is the next session-based low? The next session-based low, my friends, is down here. This is your ultimate drawn liquidity now. Okay. After everything happens, we are drawn here. Now watch. Okay, that is the natural drawn liquidity at this point. Go from here, right from right there. After London low was gone and there was a continuation, this is the draw. This guy is the draw. Watch. You see? Going long is stupid. We're going to go short up until that low. Now we can go long. You see? Now we can go long. And we all took part in longs yesterday over here. Yesterday meaning today is the 22nd, so 21st. Hey guys, all right, so that's pretty much it. So I'll see you guys in the next one. Good luck and good trading. Bye-bye.